Asia and Australia. Let us now navigate the exciting investment opportunities across Asia and Australia's fastest growing real estate markets with confidence and clarity. Investing across Asia and Australia can feel like navigating a maze of unfamiliar regulations, surcharges, and market structures. From REITs in Singapore to foreign buyer rules in Australia and exploding office demand in India. Without clear guidance, you could face unexpected taxes or miss out on high growth opportunities. But by understanding each region's unique landscape, Singapore's tax efficient REITs, Australia's surcharges and stamp duties, and India's booming tech hub office leasing, you'll diversify into some of the world's fastest growing markets with confidence and clarity. Number one is Singapore's REIT landscape. Key features of Singapore: structure publicly traded trusts, owning, owning income producing assets. Tax efficiency, no tax on dividends if 90% of income is distributed. Yields, typical distribution yields of 4 to 6%. How to invest? Buy a SGX brokerage. Buy via a SGX brokerage. Review cash flow statements on company websites. Mm, Visit www.sgx.com and research the top 3 REITs by market cap. Australia's regulatory nuances: foreign buyer surcharges and stamp duties. Foreign acquirer duty (FAD) is 8% in New South Wales, 7% in Victoria on residential purchases. Stamp duty is up to $100,000 plus on 1 million property. This varies by state. You require approvals. Foreign Investment Review Board (FIRB) application is required, plus fees of 0.1 to 0.6% of purchase price. Use the FIRB online calculator available at www.firb.gov.au to estimate your surcharges and fees. Next is India's office demand. So, office leasing in India. Growth drivers: IT and ITES sector expansion. Yields: Grade A office yields around 79% in major metros. Lease structures: typical 5 plus 5 year leases with annual rent escalations of 8 to 10%. Check JLL's India Real Estate Outlook for Q1 2025 on www.jll.co.in for city by city vacancy and rent forecasts. Now, in ChatGPT, enter compare cap rates for grade A office space in Singapore versus Melbourne as of 2025, citing recent market data. Post your AI generated comparison in the forum or the community. Let's debate which market offers the best risk adjusted yield. Asia and Australia each offer distinct growth drivers, from Singapore's tax efficient REITs to Australia's regulated but high yield suburbs and India's surging office demand. Master these regional nuances to build a truly global portfolio. And run the ChatGPT discussion prompt and share your insights. Explore one resource from the list below and note one key stat in your workbook. Stay curious and keep expanding your global real estate horizons. So these are the few resources which you need to explore: the IMF real estate reports, the JLL global outlook, and the CBRE Asia Pacific insights. And now we'll be going back to residential property investing fundamentals, starting with deal sourcing and market screening. See you there.